Welcome back to the cryptoworld channel, everyone. My name is Josh, and this video will be an important one to watch for not just Bitcoin holders, but all crypto holders, because I'll not only be talking about the Bitcoin chart, whether they are bullish or bearish, but I will also be talking about the US president's executive order on digital assets, also known as cryptocurrencies, that has just been officially released. And this right here is the crypto executive order straight from the White House. And if you're looking at the entire executive order, it is a very long document, but luckily for us, there is more of a condensed summary right here, and I'll be going over the important points to pay attention to, and believe me, these are important. Now, to start off with, it just covers some stats around crypto. For example, the crypto market recently surpassed $3 trillion in market cap, which was up from 14 billion just 5 years ago. And according to some surveys, around 16% of adult Americans, which is approximately 40 million people, have either invested in, traded, or used cryptocurrencies. But here is the important part of this paragraph. Over 100 countries are exploring or piloting central bank digital currencies, CBDCs for short, which are a digital form of a country's sovereign currency. And just before I continue any further with some more important information, I want to make sure that you truly understand what central bank digital currencies are. A lot of people out there that may be new to crypto might confuse something like a central bank digital currency to a crypto like Bitcoin or Ethereum, but that could not be further from the truth. First of all, the central bank digital currency is based on a fiat currency such as a US dollar, and central bank digital currencies are also very different in how they work to stablecoins like Tether or USDC, because stablecoins like USDT and USDC, while they might be based on the value of the US dollar, they are not issued or directly controlled by the US government or the Fed, which means you can send stablecoins on a blockchain like Ethereum pretty much anytime you want, and no government or bank can freeze your money or censor a transaction if you're using stablecoins in a secure wallet on a secure blockchain like Ethereum. But central bank digital currencies are completely different. In the case of the United States, the central bank digital currency here will be the US dollar, but rather than being a crypto that is pegged to the value of the US dollar, they will be US dollars themselves. And that means central banks such as the Federal Reserve can print these digital US dollars in a far more efficient way. But more importantly, these central bank digital currencies are designed in a way to replace the SWIFT banking system, which will completely change the way that people transact with each other across borders. And on top of that, probably the most important thing here is the fact that central bank digital currencies give far more control to governments over your money. And this should not be a surprise, because if you're looking at the trend of money and how it's moved from cash into the digital banking system, that transition right there made it easier for governments to see your transactions and also freeze your accounts and things like that. But central bank digital currencies will essentially take it one step further. For example, if you're using one of these central bank digital currencies, it will be absolutely impossible to make a transaction without the government knowing. And on top of that, because the currency is completely centralized, with the push of a button, the government can stop any one of your transactions at any time. They could freeze your account, they could freeze part of your account, they could stop your digital currency from working in a certain country or buying certain things. And I'm honestly not trying to dramatize this, but seriously, any control imaginable will be possible with central bank digital currencies. But anyway, with that out of the way, let's get further into this executive order, and I'll mostly be covering the goals within this executive order, because a lot of the strategies and descriptions that are in here are very vague. But anyway, getting into it now, the executive order calls for measures to protect US consumers, investors, and businesses. It also aims to protect US and global financial stability and mitigate systemic risk. It also aims to mitigate the illicit finance and national security risks posed by the illicit use of digital assets, and to promote US leadership in technology and economic competitiveness to reinforce US leadership in the global financial system. And they're going to do this by directing the Department of Commerce to work across the US government in establishing a framework to drive US competitiveness and leadership in and leveraging of digital asset technologies. The executive order also aims to promote equitable access to safe and affordable financial services and support technological advances and ensure responsible development and use of digital assets while prioritizing privacy, security, combating illicit exploitation, and reducing negative climate impacts. And on the very last dot point within this summary, they've conveniently happened to slip this in right at the end. What it says right here is that the US president's executive order aims to explore a US central bank digital currency by placing urgency on research and development of a potential United States central bank digital currency. This executive order also encourages the Federal Reserve to continue its research, development, and assessment efforts for a United States central bank digital currency. This effort prioritizes US participation in multi-country country experimentation and ensures US leadership internationally to promote central bank digital currency development. That entire last dot point where they've just so happened to slip it in right at the end is probably the most important part of this entire executive order, because it proves to us that a United States central bank digital currency might not be too far away. And like I said just earlier, a central bank digital currency is completely different to a normal crypto like Bitcoin or Ethereum, for example. So do not let this go unnoticed, because this will potentially change the financial system in a way that internet banking changed the financial system. But anyway, now that I've gotten through all of that, let's get into some Bitcoin analysis for today. So this right here is the 2-hour Bitcoin chart, and we had that previous bullish divergence. And not long after seeing that bullish divergence, we saw some sideways price action and then of course some bullish price action. And a lot of that bullish price action was due to the news that came out yesterday, which was of course the leaked statement by Janet Yellen about the crypto executive order. But then pretty much as soon as the real executive order got released, it turned into a bit more of a sell the news event. And if you watched my Ethereum update video yesterday, I mentioned in that video that the 2-hour RSI is entering into overbought territories, which according to history means that the price is potentially about to pull back. But zooming out to the 12-hour Bitcoin chart, and what we have here is the parabolic stopper inverse indicator technically still in the green. And this was that new bullish signal that I talked about in my last Bitcoin update video. And looking in the 12-hour Bitcoin RSI, right now we are starting to form higher lows, but we are yet to actually form a higher high, so keep that in mind. And looking in the 12-hour Bitcoin MACD, we did end up seeing a bullish cross in the MACD just yesterday. And at the time of recording this video, the 12-hour Bitcoin MACD is incredibly neutral. We have almost no momentum here. So in order to flip much more bullish again here on the 12-hour chart, like I said yesterday, ideally we need to see the price oscillators start trending back to the upside, which the RSI is making an attempt of, but we need to see more of that happening in the MACD. Now looking on the daily Bitcoin chart, and Bitcoin at the time of filming this video is still maintaining above this higher low structure. So at least as of right now, this is a good sign to see, because it means that demand is technically increasing. But as I have been saying for a while now, any bullish price action that we see below 45k is only shorter term bullish price action. So if you're wanting a much larger bullish Bitcoin move, such as a possible recovery, then Bitcoin must break above 45 to 46,000 with confirmation in order to confirm any sort of recovery like that. And here on the 3-day Bitcoin chart, nothing really has changed over the past 1 month. Technically speaking, both the 3-day Bitcoin RSI and the 3-day Bitcoin MACD are trending to the upside. And so this is still a massive signal on the chart that is pointing towards a possible recovery. But as I just said, we still need to break above 45 to 46,000 in order to confirm that. Anyway, if you found this video useful or simply enjoyed it, make sure to leave a like down below. And if you're new to the channel, be sure to subscribe with notifications turned on for more updates just like this every single day. And if you want to make more money in crypto, whether or not prices are going up or down, these 2 videos popping up right here are definitely for you. But anyway, that is it for this update. I really hope you enjoyed, and I'll see you all in the next video.